please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Well, back home on the Lal Street on Monday, the bulls sustained momentum aided by earnings recovery in some pockets. The Nifty touched the 10,750 mark intraday and rallied about 0.5%. The Sensex too ended firmly above the 35,000 mark. The Bank Nifty, that one ended with gains of around 0.5%, while the mid-caps outperformed as well. But how are the cues tagged for the day? Banglam, tell us, how do the cues look?
Well, for just the day, it'll be very difficult to say, given it was the truncated week and all of that, and we have a lot of cues. But from a longer-term perspective, over the weekend, I was looking at some data, and Anisha, I really feel good about the way things are going right now. Okay. Why? Because if you take a look at the auto sales numbers, the macro wheels, they're turning. Because auto sales for April, Maruti record sales, Eicher Motors 27%, M&M Tractor 18%, Tata Motors CV sales have grown 126%. So these are lead indicators for the economic growth. That was pretty positive. The second thing, the first commentary coming in from any FMCG company on rural demand, which is pretty important. So Dabur management commentary, yes, the earnings did beat expectations, but the management commentary was pretty positive when they said we're witnessing early signs of revival in consumer sentiment, especially in rural India. So that bodes well for the road going forward, given rural demand has been growing at a faster pace. The third one, March core sector data, yes, percentage-wise, it was the lowest in the last 3 months. Right. But remember, it comes on a strong base of 5.2%. So we'll watch out for that one. And most importantly, GST revenue collection for April. That one's at a record high, 1 lakh crore. It has exceeded that. Yes, broke the CNBC, confirmed the CNBC TV18 news break. And more importantly, the management is saying that, rather the government officials are saying that this level will sustain given the e-way bill rollout. So that is something I'll watch out for. And we'll definitely watch out for the 10-year yield as well, because the RBI has tweaked FPI norms for government bonds on Monday. Monday, the bond markets were shut. And add to that, strong GST collection data is something we'll watch out for too. Now let's look at the markets. They've seen a sharp rally to all of April. We saw 600 plus points rally on the Sensex, 2,000 on the 600 points on the Nifty, 2,000 points on the Sensex, and 1,300 on the Nifty Bank. But there are a lot of events. Outcome of the US Fed meet tonight, remainder of fourth quarter results, and of course Karnataka elections. That's a big factor because yesterday Prime Minister Narendra Modi also started campaigning. So ahead of these key events, there could be a case for volatility to spike. The India VIX is just about 12.4%. The FIIs are buying downside protection, which is also pretty good given that there is a balance in the system. And maximum open interest is at 10,500 put and 11,000 call. We'll watch out for the SGX Nifty. Currently indicates a tepid start, but remember it's recovered from the lows of the day, and it compares with the Monday Nifty futures close of 10,780. So that's something we'll watch out for.
Okay, so that's about the markets. You did mention about auto stocks as well as Dabur results. Any more stocks that we need to keep an eye out on?
A lot of stocks actually. Auto stocks, Dabur results are the ones which we will ignore right now because we will cover them later. Key results today: HCL Tech, Hero MotoCorp, Interglobe Aviation. Succession plans will be watched out for. We're talking about Dabur. Marico is another one. Kansai and Nerolac from the FMCG space we'll watch out for. L&T, you've been working on the numbers all through yesterday. They've signed a deal with Schneider Electric, so we'll watch out for both those stocks as well. CEAT, the revenues were up 14%. Operational margins have improved by about 400 basis points, so that is a positive out there. Container Corp, revenues were up 2.1%, but operationally the company reported a beat. The EBITDA came in at 429 crores. We were working with 373 crores. The net profit too came in higher by about 35 crores as against what the street was expecting. Then from some small numbers, Alicon Castalloy, the revenues and EBITDA, both of them up close to around 40-48%. Som Distilleries, the EBITDA actually grew by about 142%, so someone's been drinking a lot out there. Hindustan Media Ventures, though the EBITDA was down 54%, weak numbers. Arvind Smart Spaces, weak numbers. We'll watch out for the growth plans of the company. And then two stocks we always keep an eye out on. We have been keeping an eye out on that. One is Fortis, because of the revision of deals now, and Manipal TPG has the right to match the revision of bids that came in from both IHH and the Munjal Berman combined. PC Jewelers, that stock's been on our radar. Now it enters the F&O ban, so we'll be watching out for how the market takes that, given it is in F&O ban. Coal India, they've reported an offtake growth of close to 12.9%. We'll watch out for that. And MOIL, they've reduced prices of both ferro grade as well as chemical grades of ore, so those stocks will be in focus.
Okay, so yes, a lot of stocks ready to keep an eye out on, but it's time now for a quick break. Up next, the macro cue that Manglam talked about. GST collections have finally crossed the 1 lakh crore rupee mark.
Welcome back. This is Power Breakfast on CNBC TV18. Now, GST collections, they finally crossed the 1 lakh crore rupee mark. The trend was robust over the last few months. And the April numbers, they're the highest posted till date. The total number of GSTR 3B returns filed from March up to 30th April was 60.47 lakh. That compares with 87.12 lakh taxpayers who are eligible to file, putting the compliance rate at 69.5%. We spoke with Morvin Godino, the GST Council member of Goa, and MS Money of Deloitte to know what this means going ahead. Listen in.
The most important thing is it shows the stability in the system, that things are working well. And as I've said in your earlier interview as well, that it is going to touch and cross 1 lakh crore by the end of the month. So that has happened. And once we have the e-way bill also working, as I said, revenues are going to further rise by at least 15 to some people say even 20%.
Revenues are now stabilizing at a range of approximately 90 to 95,000 crores. So if you look at the trends of the last few months, it seems 90 to 95,000 is where the normal revenues are stabilizing. We are also expecting a few anti-evasion measures. Some like e-way bill have already kicked in, and some like reverse charge and invoice matching are expected to kick in the next 1 or 2 months. All of this together, to my mind, should lead to a revenue which will certainly be at par with the budget.
Okay, and the government has extended the deadline to bid for Air India till the 31st of May. Centre has also made 160 queries it received on the divestment process and its responses public. Ashpreet Sethi filed a report with all the details.
In response to the queries that had come in regarding forming consortiums, regarding whether more time can be given as far as bidding is concerned, now the government has gone ahead and issued a corrigendum saying that the deadline has been extended to March 31st, and in fact the successful bidder will be announced only by mid-June. So now what are the queries? The queries are mostly related to what will be the employee retention policy, what will be the way forward as far as government stake is concerned. As far as 24% stake of government is concerned, there are a lot of suggestions rather than queries saying that government should give up or give up the whole 100%, divest the whole 100% rather than keeping the 24%. However, the government has clarified that it's only a minority shareholder, and eventually ESOPs, such as employees, will also be able to go ahead and bid for Air India. The 24% stake that they will be retaining will be diluted further. As far as business and synergies are concerned, a lot of queries about whether consortiums can be changed later or not. Through a corrigendum, the government has clarified right now that consortiums members cannot be changed after the EOI bid deadline. Prior to that, they can go ahead and change it. However, they'll have to give a fresh proposal. Also, there have been concerns regarding debt. There hasn't been any specific query that has been answered by the government as far as responses are concerned, where debt situation has been sought for. But there, the government is saying that the debt has been clarified. It's about 33,000 odd crores. It will change subsequently. Now, as far as other issues are concerned, there was a very interesting one there, whether elections 2019 will have an impact on Air India divestment at all or not, to which the government has said that this is not a relevant question. Now, we did speak with Ajay Dua and even Jitendra Bhargav, who have been saying that employees' rights need to be protected, and Ajay Dua, of course, pointing out that it's a tepid response. However, I did speak to someone at EY, and this source is indicating, who doesn't want to be named right now, that they have got a holistic response. In fact, they are happy with the kind of response they've got, though he refused to divulge whether these are international bidders or domestic. He said that final names will be put in public domain only after May 31st.
All right, thanks a lot for that. Let's talk about some resolution process. Now, in a major bad loan case, resolution process has been halted by the National Company Law Appellate Tribunal, NCLAT as we know it. They've ordered a status quo on the insolvency process of Electrosteel Steels. Ashmit Kumar filed a report on the details of this story. Hear him out.
Setback coming in for the insolvency proceedings for Electrosteel Steels. What we understand is that the NCLAT has passed very clear orders directing a status quo to be maintained with respect to those very same insolvency proceedings. Not just that, the NCLAT has gone a step further and directed for the panel that is in charge of management of the company to restrict their expenses to only the day-to-day expenses of the company, so further being limited the scope and the operation of that panel as far as Electro Steels is concerned. Now, both these orders come on the back of an appeal that had been filed by Renaissance Steel. Renaissance Steel, mind you, is one of the bidders in contention as far as Electro Steels is concerned. And the reason that they've moved NCLAT is to challenge the eligibility of Vedanta under Section 29A. Now, on the back of that, what we understand is that the NCLAT has agreed to hear Renaissance Steel's application, has also issued a notice to Vedanta, and it has done so because Renaissance Steel essentially argued that their bid was to the tune of 6,000 crore rupees, which is 700 crores more than Vedanta's bid of 5,300 crore rupees. So that's the moot point here, Section 29A, the difference in bids. The NCLAT will now take up this plea for further consideration on 17th of May.
Okay, moving on then, the government announced last week that every single village in India now has access to electricity. But remember, the government considers a village as electrified if about 10% of the village has access to power. Hence, this does not necessarily mean that every household in the country has electricity. In fact, according to the Power Ministry's own data, over 3 crore households still do not have access to power. The Minister for Power, Mr. R.K. Singh, spoke to CNBC TV18's Rituparna Bhuyan, and he's confident of providing power for all households by the end of this year itself.
We have reached every census village. Right. That's what we have done. Right. Now, for 100% electrification, we will have to connect every household. Yes. Which we plan to do, which our target is that we do this by the 31st of December 2018. Right. It's a huge target. You know, the states have reported that there are 37 million households which have not been connected with electricity as yet. Imagine, 71 years after independence, you still have 37 million households not connected with electricity. We have to connect all that. Up till now, we have done about 50 lakhs. Right. But we have a huge amount of ground to cover.
But you know, from now till December, it is within that period of time that all these houses will be electrified. Yes. So how are we going to do it? What is the strategy going to be like?
You see, how we have worked it out, and this is something, you know, which we have worked out with all the states in discussions here. And then we go to the states and discuss it with their minister, the chief minister, and the principal secretary and the CMDs of DISCOMs. So we've done this in discussions with the states, and we have refined strategies. So, you know, the teams have been formed.
All right, then, time for a short break. Come back. We talk about two stocks which will be in focus. Schneider Electric to buy parts of...
Welcome back. Well, the growth in 8 key infrastructure segments slowed to a 3-month low in March, dragged down by sluggish output from crude oil, natural gas, as well as refinery products and the fertilizer sector as well. Now, the data released by the Commerce and Industry Ministry on Tuesday showed that the fertilizer and cement sectors reported healthy numbers, growing by 3.2% and 13% respectively. On the other hand, growth in the coal sector slowed to 9.1% as against 10.6% in March 2017. The steel sector grew at 4.7% compared to 11% a year ago, but the electricity generation growth rate decelerated to around 4.5%, while crude oil recorded a negative rate of growth of 1.6% in March this year.
And let's move on to the big saga, yet another twist in the long list of twists and turns in the race for Fortis Healthcare. Malaysia's IHH has now gone ahead and sweetened its offer to acquire the company, and Munjals and Bermans, they too have revised their offer. Nisha is here with the key details. Nisha.
May 1st is the deadline for the final bid submission, and IHH as well as Munjal Berman bids have already come in. Quite aggressive, I must say, and it's a tough task that is going to be ahead for the board of Fortis Healthcare in evaluating these offers as well. So Munjal Berman, they have upped their offer. The upfront payment has increased to 1,050 crore rupees. The overall fund that they have promised now is 1,800 crore rupees, which is higher by 300 crore rupees from their earlier offer. So the implied average weighted valuation for Fortis Healthcare share is 172 rupees per share. Now remember, they've also increased the amount of board seats that they want from 2 to now 3, and they have a plan for selling SRL in order to infuse funds to buy out RHT. When it comes to IHH, that requires due diligence. but they have increased the valuation to 175 rupees for the upfront payment of only 650 crore rupees. But their total amount that they have offered is 4,000 crore rupees, and rest is dependent on due diligence. Not just that, they want even exclusivity as well as 2 board seats. So these are the 2 which have really come in. Remember, Radiant as well as Manipal TPG are still in the fray. Manipal TPG will get the right to match in the next 5 days. And as far as the apple-to-apple comparison is concerned, surely in the valuation of Fortis stock price, if we just look at that, Manipal TPG is at 160, Radiant 170 to 175, and at the moment IHH is highest at 175, while Munjal Burman is at 172. But another parameter, remember, is the due diligence, because it takes up time, and 3 weeks is sought for by IHH as well as Radiant.
All right, we will keep an eye out on this reality show as it plays out. But one of India's largest engineering and infrastructure company, that is Larsen & Toubro, they have exited or announced the exit of some of their non-core businesses. The company will sell its electric and automation business to Germany's Schneider Electric for 14,000 crore rupees. Anisha, give us the details.
Well, yes, as you mentioned, they have signed an agreement with Schneider to sell the electricals and automation business at a valuation of around 14,000 odd crores. Now, it is expected to be completed within the next 18 months. And if you look at the revenue contribution in FY17, this business added around 5,000 crores to the company's top line, making it a 4 to 5% contribution on the top line. Now, analysts were pegging the operating profit for this particular business anywhere at 1,000 to 1,200 crores in the coming 1 or 2 years, given the margin profile is close to 15%. And if you look at the overall valuation that the analysts were pegging, it was anywhere between 13 to 15,000 odd crores. Hence, this 14,000 crore valuation fits right into the range. So, looks like they have got a fair value as far as this is concerned. But the bigger positive coming of this is that the management is serious about selling the non-core assets. Now, this is something that we have been hearing from the management from a long time. And this is one of the first non-core assets that we have seen in a bit. So, this comes as a positive. In fact, what brokerages say on that? Now, Kotak says that yes, it is on the lower end of the valuation range that was being reported earlier, because earlier, a couple of years ago, the reports were mentioning that L&T is looking at a valuation of perhaps 17,500 crores. But still, the valuation that they have got at 14,000 appears to be fair. They also say that the deal is EPS accretive, and they're expecting a 2% expansion when it comes to EPS in FY19 itself. Though in FY20, they do not see any meaningful impact as far as EPS is concerned. Now, what CLSA says, they call it an extremely good divestment. They say that they have done it at a very good valuation, given that deal was 75% above the value that they were pegging for the electricals and automation business. They also say that given the fact that the company will get cash consideration, their working capital will improve. That would add around 2.5% to their target value, and also 4% to the consolidated EPS. And also the flag of the possibility that the investors might be getting in some special bonus coming, because remember, the value that we get of this deal is around 97 per share. So maybe, and the management has also been talking about making the dividend payout ratio to 50% versus the 35% that it is right now. So maybe that is one thing that we should watch out for. But in fact, on that note, let's hear what the managements of the two companies had to say regarding this particular transaction.
Schneider, as you all know, is a 24.7 billion euro organization, and it's one of the best companies to house this business of ours. It's been an integral part of Larsen & Toubro, but as we move forward on our path of infrastructure, construction, EPC, manufacturing, defense, and certain services, we feel this business does not fit into a long-range thinking. Business also requires a fair amount of R&D spend, tooling, and such other factors to keep it positive and moving. So we believe Schneider is a good company to handle that, to take it forward.
This business is very, very important and strategic for us. It's core of our business. By combining this business of electrical and automation together with our low voltage and industrial product automation products business, we will be creating a very strong business here in India, which is strategic not only for India, for our stakeholders in India, but it plays a very strategic component in our global footprint. And this will be serving, for sure, the fast-growing India low voltage and industrial automation market.
All right, let's shift focus then to some earnings. Sonia, Hero MotoCorp will be reporting the earnings. What are the street expectations on that one?
Well, thanks a lot for that. It's expected to be a good quarter actually for Hero MotoCorp. So I'm expecting a revenue growth of almost 24%. Now remember, this quarter the volume growth was very strong. It was mostly because the base quarter had demonetization and the BS6 impact. So on account of a low base, the growth will look very good. This time around, the volume growth has come in at about 24%. This compares to a 16% volume growth last quarter and a 10.5% volume growth in the previous quarter. So growth has been good. That will lead to revenue growth of about 24%. The margins will also improve. So I'm expecting about 16.5% margins compared to 13.8% same time last year. This is on account of the operating leverage benefits, but not just that. The average selling price has also gone up, so that will aid the realizations this time. We're expecting realizations to come in somewhere around 43,000 rupees a unit. However, there are two factors which could dampen the higher margins. One is rise in commodity costs, and the other one is some expenses to the tune of 40 to 50 crores which they had to incur because of the Auto Expo. But apart from that, the trend is expected to be good for Hero Motor.
Okay, Sonia, thank you so much for that. But also tell us what to expect from Interglobe Aviation. Of course, apart from the numbers, lots of eye would be on the management commentary given Aditya Ghosh's resignation.
Oh, absolutely. You know, that's the most important thing to understand whether there is any talk on the succession plan post Aditya Ghosh's resignation. Now, remember, the reports indicate that Gregory Taylor, who is currently the senior advisor to Rahul Bhatia is now the interim CEO. Gregory Taylor, who is a senior advisor, could be in for the top job. So maybe he could be named CEO. If that comes through, a lot of people say that it could be taken as a positive because of the vast experience that Gregory comes with. But let's see what plays out on that front. On the operational front, we have some estimates coming in. There's actually a mixed bag. Kotak estimates that the performance will be good this time around. However, on the flip side, Edelweiss says that there are a couple of issues which could plague the numbers this time. There was this grounding of planes issue, and that really could lead to some amount of revenue downtick for them. Although overall the passenger growth for the sector was good this time, so there's no problems with that. But there was company-specific issues that Indigo had to deal with, so maybe that could impact. Now, see, nobody knows what the quantum of the loss could be because of the grounding issue. So some are forecasting that there could be a big one-time loss, some are not. So it's all over the place. But just to give you what Kotak is estimating, a revenue growth of 30%, EBITDA growth of 55%, and profit growth of almost 42%. 500 to 600 crores is what analysts are forecasting, but as I mentioned, there could be a one-time loss because of the grounding issue.
All right, Sonia, we're just not done with news from you yet, and this is, we've saved the best for the last. Auto sales, they've come in robust for the month of April. Maruti record sales.
Oh, absolutely. Maruti and Tata Motors are the stars in this month's performance, because as you mentioned, Maruti hit record numbers this time. It was largely expected, but slightly better than what the street was estimating. So if you look at the numbers for Maruti, a 14.5% sales growth, 1.72 lakhs is a run rate that they've never hit before. And if you look at the trend, last month, that is the month of March, it was 1.6 lakhs. In the month of Feb, it was 1.49 lakhs. And before that, 1.5. So it has been trending upwards. Now, there are a couple of reasons for this. One is that they had that refresher of the Swift, which was launched recently. That did extremely well, and because of that, the compact car sales have gone up by 31%. It also has the Baleno, the Ignis, which have been doing very well. Not just that, there was a good growth seen in exports this time around. But the other ones also are pretty strong. I mean, Tata Motors, very, very strong commercial vehicle sales. In fact, commercial vehicles, MHCV, medium and heavy commercial vehicle sales have risen 300%, and the management says that couple of reasons. There was overloading restrictions in UP, Rajasthan, etc., which meant that higher tonnage trucks were being sold, and that was a big positive. Infrastructure activity has improved. So these are the two stocks to focus on. The others were largely in line. So M&M had a decent growth. Auto sales were up 22%. Tractor sales were up 18%. Eicher Motors Royal Enfield was not bad. Total sales were up about 27%. There was a 60% growth in the above 350cc category, and TVS was slightly under pressure, but not bad. 20% plus growth is what we've seen. So overall, it's been a good month for the sector.
Okay, Sonia, thank you so much for that. We will let you go on that note, but we are not done discussing stocks yet. Let's do one thing. Let's slip into a quick break, but when we come back, we will discuss HCL Tech. Remember, it reports its quarterly numbers today. We'll get you the expectations after this short break.